Alright, so this is a trend review of the action today. Um, as you know, the markets are going up, so there was an opportunity, and I saw this. It was very obvious. And basically, I think it was last night, it gave the buy signal over here. So let me just explain what type of action this is. You have, if you can see where it says buy, right, you got to buy the retest. So the high volume here represents failure or effort reward, and you have a rally up and the trend is up. So the idea is to buy the pullback. I don't understand. I put the order here and I thought I was just going to sleep and just let the trade play out. But when I woke up in the morning, it turns out that like the computer goes into sleep mode or some mode, and the orders are not getting filled. So, but whatever, I know better this time. So be careful. Like if you're putting on orders, even if they have stops and targets, if your system goes into some mode, because the problem is there's certain orders they're called server side orders, and then you have others that are local orders. So you can do this, but you need server side OCO orders. So when let's say you put on an order, the stop and the target are on I think it's not the broker, but the FCM or whoever. They would have the order, or the exchange, they would have the order on their server, the stop, the order entry, and the target if you have server-side OCO. And this one didn't have that, so that's the benefit of I guess server-side OCO. Otherwise you're stuck with this local orders. So that's something to remember if you're going to trade and just go to sleep, because a lot of these trades set up at night, especially in gold. Anyway, so the order, so you have to understand what's really going on here. You have a rally, it's in a trend, you have high volume, it's going up, you buy the pullback. It's that straightforward. And that's what I did, but it didn't work out because sleep mode. So I'll just trade it tomorrow and see what other opportunities are presenting themselves. So you could trade this this market, the YM. There are other markets also that are setting up. I'm going to show another market I'm looking at. I'm not too sure about this, but you never really are. The probabilities are definitely on my side. There's I think the bond market is showing a trade. The gold market didn't work out for me. I had to trade on it, but it just didn't work out, and that's fine. You'll be right a lot of the time, and you just have to go with that. Also, be careful of trading lower time frames. Like some folks trade like the 1 minute or the 2 minute or the 3 minute even. You really want to be careful, because if you're getting signals on such lower time frames, they're not going to let's just say you have to be careful with very low time frame, because I'm sure if someone does a study of signals or whatever logic, and the same exact logic, and you use a lower time frame and a higher time frame, for sure the higher time frame would have more higher probability of success. Now, why is that? The reason is because the higher the time frame, the more people are using it to trade off of. So for example, if you have an hourly time frame, you'll have all the intraday day traders, the 5 minute, the 1 minute, the 3 minute, the 15 minute, the 30 minute, 10 minute, they're all looking at it. If you have a 4-hour time frame, you have the 1 hour guys and the 2 hour guys along with the intraday traders looking at it. If you have a daily time frame, then you have the hourly, the 4 hour, the so on and so forth. So I think this is the reason why signals tend to work better on the higher time frame, just by the virtue of other traders on lower time frames looking at these higher time frames to identify levels to trade off of. And it also means that the lower the time frame, the less pressure that signal is going to have, because the less people are going to be trading off of it. That's something to keep in mind. You always want to use a higher time frame because, in my experience, it just increases your probability of success. Anyway, so this was the trend, this was the rally, this was an area to trade off of right here, bang, and you have a move off here. The other thing here I'm taking a look at is the higher time frame, and this is such strong markup that you on the YM and Dow futures, you really want to be careful with any short trades. I'm not saying don't take them when you have the opportunity, but you better be able to get out of them quick, fast, because this is pure strength. This is not normal markup. This is on another level. This is how momentum stocks are supposed to be moving up. Alright, like the Chinese stocks, this is how they move, or something that is very illiquid, that has wide spreads. That this is how they move, and this is how the Dow futures are moving. I mean, that's on. This is not just markup. This is extremely strong markup. So be careful with any short orders. And understand that any rotation back down, there's buyers all over this place. There's buyers here. Whoever tried to sell over here, or whatever this is, they want out. Look at this. Market tries to go lower, totally reverses up. Again, the market tries to go lower and totally reverses back up. This is the result of what? Buying pressure, or Trump's tax plan. So just be careful with the short side, and look for long opportunities, and also if you're trading the ES and these other markets, consider the Dow futures, because in my opinion it's probably one of the easiest markets to trade. It's slower than the NASDAQ, so you're not going to get whipped around that much. And it's more trendier than the ES, which has a tendency to have stop runs. And there's also too many smart people in the ES, and too many smart systems. But the Dow is just right. It's $5 instead of, I think, $12.50 per tick. And it's traded, it's not a CME product. I think it's Chicago Board of Trade. And I think that there's less craziness there. If you're a Wyckoff type trader and you like the breakout and the test and the breakout and the test, that type of behavior is very common with the Dow futures. So anyway, that's the trend review. Again, we see that you had the rally, you had the pullback, you had the retest. Price goes higher, price tests. This is where the failure is. This is some of that effort reward failure, and then you have that rally, and then you have a pullback, which happened overnight or very early in the morning around 6:45, which I don't know, the order didn't fill, and then you have was over a 60 tick move. Let me see the move here. I had it exactly at this level, right there, and then it went up 61. It's about a 60 tick move. That's not bad. one rotation up per contract. And it's very easy move. We had the FOMC, and it didn't give a damn about the FOMC. It just moved right up real nice. The other trade also is watch the bond futures. If these markets continue to go higher, chances are the bond futures will continue to go lower, and you can trade on the long side, the Dow futures, and on the short side, the bond futures. And the bonds are a little more expensive per tick. It's a lot more expensive, but the risk is usually like 3 to 6 ticks. So in dollar amount, it's not really that much, depending on what type of chart you're trading. So good luck. Boom boom.